Consumer Price Index data releases, so it's the CPI inflation data, those have been really affecting the market because of their influence on Fed policy for the past year plus now. You can see on this chart of the SPY S&P 500 Spider ETF that every one of these pink vertical lines represents the release of CPI data, and you can see that sometimes the moves were quite dramatic. Now, with where we are now, coming into the release of June 2023 data, scheduled for Wednesday, July 12th, it's very interesting because for the first time in years, the data is expected to show that inflation has cooled off quite significantly. If that's the case, you would expect that market participants, right, SPY, the Dow, everybody else, would like that news, and we would see a new move higher on the SPY. Here's the thing. I've been digging into the SPY every weekend for the past several weeks and going to continue going forward, where I'm putting out a special 240-minute chart report for my Trifecta Trading Club members. Now, in these reports, I get really detailed on intraday levels, intraday forecasts, and more. But if we hone in to the recent action, okay, looking at the spring into summer here, specifically coming into the June release for the May data, on June 9th, so the week ending June 9th, I then posted a report on Sunday, June 11th about what the SPY was likely to do. And yes, there was inflation data coming out in that week, but still I made my market call based on my trifecta of price, time, and momentum. And it was very beneficial. So let me show you what I mean. So here's my Skinny on the SPY draft report heading into June 11th, all right? Or written on June 11th, heading into Monday, June 12th. That showed that the outlook that I had down here was for shares continue higher up into 438.08 to 440.33. So let me drop those lines on the chart so you can see them. So again, knowing that I had posted the report based on price action through Friday, June 9th, here's what unfolded. The SPY did trade higher into 433.08 right away and continued. And though it posted a volatile bar the day after the May data was released on June 13th, the market continued higher into my second target. So this was extremely helpful to the traders who were receiving these SPY reports at the time. Now let's bring us to current times and look at what we should be paying attention to coming into the Wednesday, July 12th release of the CPI data, as well as any key levels that may be present, all right? So again, with the expectation that the June numbers are going to show a really significantly positive change in inflation, a lot of people are expecting that the market will surge higher. The thing is, guys, it depends on how the market trades into the report. So I have intraday forecasts and intraday support and resistance detailed in my Skinny on the SPY that my Trifecta Trading Club members have access to. Okay, so I'll leave that information there. What I will point you to is to important support and resistance that's right here on the chart. So specifically 444.30, which tested the high from June 15th but wasn't able to really push above it, that's our most important nearby resistance level. And the support level to monitor is this June 26th low. Okay, so the market's sort of been consolidating between the last pre-CPI day low, this June 12th, 430.17. See how it's held as a barrier? And been chopping around this June 15th high. Now, when you bring in the price history, which is something that's been really helpful about the SPY, okay? So on top of all the detailed analysis I do daily for the E-mini S&P 500 futures, I have found that bringing in my own practice of doing this weekly SPY report for the Trifecta Trading Club is making my ES analysis even better because it's allowing me to have this quick return to the past history, right? So notice that this bar from April 22nd, 2022 has just been containing so much of the recent price action, okay? This is the beast to conquer for the SPY. Is it going to do it this week after CPI data? That's yet to be seen. We know that at first it would have to at least climb over 444.30. If on the other hand, there's something about the data or other information surrounding it or activity around the globe this week that dampens spirits and lets the market participants remain worried that the Fed might continue to hike rates, then the key level to watch is at 431.44, with the awareness that really it's this exact bar from June 12th. Again, the last time we were pre-CPI data release. That is a support area to watch. Again, the full details of my intraday levels and intraday forecast are in the Skinny on SPY report in the Trifecta Trading Club. I'll also be keeping up with my ES and NQ analysis in my Skinny on the Mini. So we'll see what unfolds when CPI data comes out this Wednesday. Catch you next time.